I've been a member of the EPA for about 4 or 5 years now, and I know what a community means, and it truly is a community of companies that are helping each other and helping the industry take further strides and progress further. And I thought that organizing something for the region would be amazing. And in that respect, I can think of no one better to run EPA CEE than my friend and colleague, Dušan. Please, Dušan, come up here.
Thank you very much, Pavle. Thank you, Tony. I'll be very short. Don't worry, we don't have to be on the agenda. So, idea is very good. We are talking about it, I think it was last summer. Is there a possibility, or there is a space in this region to establish a community like that? And of course, it is. And what is most important, actually, we are now on the top of the wave. This is the best time to do it, as everybody is talking today, our panelists and the guests and the speakers. Now is the time to change. This is actually the fastest moving period of the payment industry ever in the history. So either we are going to be in that train or we are going to step out and fall out of it. And this is not thing that actually this region deserves. I think now is the time that actually we take a lead, because we are talking about CEE region, and this is an opportunity for us as Serbia and of course as a Belgrade Center to become the leader in that particular field and actually to take a lead and to move forward. On the other hand, we can use, of course, a lot of experience that we are going to have from our colleagues from the Great Britain, and also, and again, we are going to use all of you and your expertise and knowledge to help us build that community and actually help us to make that road successful. So, as Tony said, you have the forms on your tables. Please fill it in, because now next step is going to be to assemble an advisory board. So everybody who's interested to become the part of this one, now is the time, now is the time to be on the edge of tomorrow. And now is the time to help us and to lead the way into the future of the payments. So thank you very much, and we are going to approach you very, very fast. So thanks once again.
Hello, it's me again. Ever since we started doing this, I've got to say I've done about 6 TV interviews, and I'm finding that I like it on stage and getting the limelight. So I'm proud to be hosting the Open Banking panel, and I've prepared this. And the things that we would like to address during the panel is things like, do banks have every right to play in the same way as fintechs by collecting data and selling it? Is open bankings meant to get banks smarter or let entrants in? Or even things as, what is the bank's role in fraudulent cases? In a post-open banking world when data is compromised? These are just topics that concern us all within the industry. And to debate completely different things, I would like to invite my panelists up on the stage. Please join me. Natasha, Slawomir, Gary, Monica, Daniel. Please sit down. I thought it might be easier to let each one of you do a brief introduction about sort of who you are and what you do, and then I will kick off the discussion with the first question, and I encourage you all, as much interactivity as possible. And one thing that I forgot to add, and I promise I'll be quick, is that following each question that we discuss on the panel, I would like to open it up to the floor and invite questions in before moving on to the next topic. Is that okay with everyone? Amazing. So please, Monica.
Thank you. Hello, I'm Monica Sasso. I'm possibly one of the most off-piste members of the panel today. I work in Deutsche Bank Wealth Management as a director in global regulatory change. So you'll appreciate that probably most of my clients are not massively digitally savvy. But nonetheless, I think there's absolutely a future in the digital environment for wealth management. So thank you.
So hi, I'm Natasha Kyprianides. I'm the head of digital banking and innovation at Hellenic Bank. I'm accountable for all digital banking business across all segments. And my career spans over 17 years in the banking industry with special focus on formulating digital strategies and executing them, as well as leading transformation journeys.
Hello, everybody. My name is Szepietowski. I'm from Burdenbert. It's an international legal practice. I'm heading a Warsaw office and also responsible for the banking and finance practice. On a daily basis, advising regulated entities how to be competitive as those not regulated, and to those not regulated to stay unregulated and be happy of that.
Good afternoon, Daniel Martyniuk from Deloitte Digital. We launched the Deloitte Digital brand in Central Europe about 2 years ago. So we try to take the traditional strategic advisory that Deloitte does and merge it with the actual technology implementation, because nobody wants to pay for just a PowerPoint. So we actually get into the implementation of solutions, and we focus on financial services, and we actually bring the fintechs and we bring the solutions and technologies to our clients, and we help them not only decide what should be the strategy of how do I achieve open banking, how do I make use of APIs, how do I get ready for PSD2, but actually which solutions should be based on, what should the business model work for in the future. So I'm looking forward to contributing to the panel, as this is what we advise our clients.
Hi, I'm Gary Munro. I'm a principal consultant at Consult Hyperion. We're a specialist consultancy in the UK. Actually, we operate all over the world, but we focus on securing transactions and helping our clients understand how to create and use the infrastructures in new and innovative ways.
Thank you. So let's kick it off. Natasha, this is for you. How have new technologies played a role in redefining the platform? Do you see the banks as becoming part of a comparison site, or are you Apple building the App Store?
Right. Well, about a month ago, we launched our public beta API banking platform. Mm-hmm. So that was the first iteration of a fuller platform that we will be putting out there over time. So to answer your question, I would say that one needs to look into various business models. So I would start by explaining a little bit what a couple of these primary business models are and what we are doing about it. The first one is platform banking. So platform banking can be compared to the Amazon model, mm-hmm. where you have this platform that, well, Amazon basically what they have done is they have eliminated the traditional retail distribution model by creating direct relationships with suppliers. And I would say that in open banking, platform banking is a bit like that. You would allow, in a non-curated way, third parties to use your API layer and create products and services and basically build a whole business without being a bank, without having a license as a bank, on top of the bank. And gaining access through the API layer that acts as the entry point to the underlying technology. So that's more or less platform banking, which is also known as, with other terms, such as banking as a platform or banking as a service. And another primary model is marketplace banking. Marketplace banking is a model whereby a bank can curate how a third party would build a service and a product. So banks are would normally be focused on delivering a better digital experience by creating partnerships with the third parties and then curating the whole process of building this product or service. And then a hybrid model between these two would take it to a whole other level of creating a proprietary app store. So then that introduces the concept of app store banking, and then making available these products by cherry picking them onto this app store of the bank. So then that gives more options to the customers, and that gives you more of an opportunity as a bank to meet the customer needs.
Okay, thank you. Gary, would you agree with that?
Yes and no. I can understand. once the open banking APIs are created, then the bank loses a degree of control as to how their products and services are actually get to the end customer. So we can see these intermediary players who are going to who will say to a customer, give me your banking needs and I'll find the best deal for you. And so you start to get a layer of disintermediation between the bank itself. So what we can start to see is where the challenger banks and the other players in this sort of space, they can focus their energies on specific areas and specific aspects of banking and use these APIs to deliver it without actually being a bank themselves.
Okay.
I think my question would be, so which strategy is your bank pursuing then in this?
A hybrid one. So it's a cross between the platform and the marketplace banking model. So we are curating some of these products and services by third parties. So we're picking partnerships using a quality filter. And then we're also allowing any third party to build whatever they want.
So I'm just going to say opening up banks into fintechs and everything means extra regulation for those new entrants. So Monica, how will the regulator help sort of enable efficient collaboration? And a sub-question is, it's a new one, and in the absence of regulation that's fit for market, should financial institutions, sort of take the approach, it's, easier to apologize than ask permission?
Ooh. I think I'll go with the second one first.
Okay.
I think that they already have been doing that.
Okay.
I think there's not a CFO in any financial institution that doesn't already have a pot for fines. I'm hoping that attitude changes over time. I think there are two things that are not going away. One is regulation and two is innovation. So you either get on board, I think the chap from the EPA said it earlier, you either get on the train or don't bother getting on. So I think that that's happening, and I think the regulator wants that to stop happening. I think consumers want that to stop happening. I think we're all sick of everybody getting fined and saying, oh, well, such and such bank has been fined $15 billion or pounds or sterling or whatever currency because you feel like you're being taken advantage of. So I think that's going to be forced to stop. The first question, how can they foster collaboration?
Yeah.
If I can paraphrase that.
Yeah.
I don't think that the regulators can, and I don't think that they will. I think the collaboration is going to happen organically. I think that something that we heard on the first two panels earlier is it's already happening. At the end of the day, everybody wants to make money. Whether you're a bank or a fintech or me or Natasha or Daniel or whomever, we're not up here as a charity, so to speak.
Yeah.
And it's going to happen organically.
Okay.
Well, just one comment to that, because, well, I when speaking with the market players, I have the feeling that, well, still the banks and this open banking is a threat to some of them. So, well, sharing data is still an open point for discussion. Is it good? Is it bad? Will we win or we're going to lose? And I think, at least from the Polish market perspective, now when the PSD2 implementation is being discussed and the API for allowing third-party providers access to, let's say, banking data is discussed, the direction is, well, let's make something uniform, so at least it takes away all the doubts whether someone is in preferred position or not. Let's make something, and this is more the burden on the regulator's side, let's create something that all the market players will feel comfortable with that. If they have an access, it's on the same fair rules. And I think that this is a compromise, also for those being a little bit scared about access by the third parties to our database. And the last point, in fact, the contrary to this, well, to me, it is, well, all these regulations, and the reality is that, well, this is the customer that regains the power over his data. Yep. This is not that someone is deprived of his right to data, like a bank or any institution. This is us as customers that have a freedom to decide to whom it goes. And this is PSD2, but this is GDPR also with portability of data that gives real tools for that. So we have to accept it.
You said about the fair marketplace, and I mentioned earlier about price comparison sites in terms of insurance in the UK. Those price comparison sites are owned by the insurance companies. So they tinker about who comes out first. And so if you were to open up a price comparison website for banks, and they're owned by banks, and then would they, suffer from the same, I hazard to use the word beginning with R, would they suffer from that same fate? Or can you create a natural, sort of a fair place for everyone?
Well, I think you already kind of have it in the payment accounts. The payment accounts directive, that was PAD. That forced banks to be able to allow people to move between them within 5 days or 7 days. I can't remember. I think it's 5 business days, 7 days. There we go. Thanks, Gila. So they kind of already have that. They have that right of choice. I think what you're talking about is also a conflict of interest. And I think the more that people understand data and the more that it's available and the more that they want to read it and learn it and understand it, it's going to force people to be more open and honest. Okay. The banks to be more open
Natasha, did you want to jump in?
Yeah, well, the next evolution of this would be the aggregators. So you would get a lot of aggregators out there as a single point where they would be collecting the data from all the banks on one interface. And then the bank will have to be part of this, otherwise they would lose out. So it needs to be seen as an opportunity to give better service to customers rather than any kind of threat.
So the customer is in the center. We heard that before today, and we're hearing it again today, right? The purpose for the regulation is so that the customer can decide where I keep my money and who manages or executes my payments and my transactions. So the vision is clear. You want to have one place where you go, where you see all the money from various financial institutions, whether it's investments, savings, or loans, or deposits. So you want to be able to have that. And now there is many, so we talk about making banking as a platform, as one of the business models. There's many car sharing platforms. There's many hotel room seeking platforms. The ones that win are the ones that entice the imagination of the customer to interact with them the most and to choose them as the primary source for information. So when I travel, I also have my preferred site. I go to that site and I look for hotels and bookings. I do it. Maybe it's not the best. Maybe it is the best because I'm using it. But I know it. It's intuitive to me. It's simple to use. And it also gives me the data in a nice visual way that I can imagine. So if I look for a hotel room, of which there are thousands in a particular city that I'm going to, I can imagine the same for banking. So the ones that's going to be the most intuitive, the most user-friendly is the one that's going to win. Now, is it going to be a bank that's going to decide that I'm going to differentiate and build this best platform? Is it going to be a FinTech? I think that's yet to be decided. And I think this is what we're talking about. Who's are going to be the winners and the losers, but also who's going to choose what business model. Some banks might say, I can't compete on the front end. The FinTechs are much faster, they're much clever, they're much smaller and nimble, more reactive, so they can do things much quicker. Maybe I'm going to compete as the trusted party that actually holds the money and holds the accounts. And in that case, there is still room for those banks that actually want to be the trusted party underneath that holds the accounts. And maybe they don't make a lot of money on a single customer, but they have millions of customers. And maybe that's a business model for them as well. So I think it's yet to be seen. I'm excited about the possibility for me to be able to see all my accounts in one place across borders. I've lived in Canada, I've lived in the US, I have accounts there, I have accounts in Europe. Transferring money back and forth is a pain. Obviously, there's currency risk there as well. I'd love to be able to see a FinTech or a bank that offers me a simple, intuitive way to manage all my finances wherever I am or wherever the money is.
I think to achieve that, then coming back to what you were asking about collaboration is essential for that. The regulation today just basically says the banks have to provide APIs. It doesn't say what they look like, and they can be different from one bank to another. And so to actually provide these services that the banks are offering through this, you need a common set of APIs, or you integrate into certain banks, but you don't integrate to others. So we can see this starting to pull together at local levels, but not cross-border levels yet. And so to get to where you want to go, it may need the regulator to step in at another point in time to bring this conformity to provide a true European single banking system?
I have a dream.
I promised at the start to open it up to the floor, so I just want to look to the audience. Are there any questions? Yes. Can we get a mic? No?
So, nice discussion. My name is Miloš. I'm the CMO of Telenor Banka, so it's like digital bank, or let's say mobile bank in Serbia. But the question for me, taking into account everything that you said, is what do you think will be the reaction of the card associations towards what is happening on the market? Yeah. So, like this open banking, and I think the colleague from Deloitte mentioned it, and you on the end before. There will be like trusted bank. Yeah? Now pretty much there is a trusted card association, which is like is an aggregator of the transactions pretty much, or let's say majority of them. So if we neglect the current account transfers, yeah, but pretty much they are the aggregators, and they are like very powerful in a sense of capitalization and let's say worldwide spread. And with this open banking, what do you think? How they will react? So what will be their like position in all of this? Yeah.
Well, I think some of the regulation that comes into play in here means that the people that are playing in this market space, they are regulated, and they have to be regulated by the local authority in that space. So we're not talking about a free-for-all, we're talking about people who actually have to come and become registered, pass through the regulation that they have to meet, even if they're not a bank themselves, but they want to use these banking services. So the PSD2 regulations, which are coming into force, do put an onus on the local regulator to put this in place.
It's just maybe to clarify, so I understand that. So all of us, we have a current account, yeah? So currently I see this plastic as a mean to spend my money from my current account, and it is. It's for the credit card, for the debit card, yeah? It's just like having this card in a pocket. I know that the banks have some expenses for the issuing, for the transaction itself. So with this like deleting from the ecosystem, what do you think it's going to be the reaction? So this is
I can give you the specific example of what's happening in Poland. There's a union of about 8 largest banks, not 8 the largest, but 8 of the top 10, I would say, that set up a mobile payment and mobile cash withdrawal solution that bypasses the card scheme. So it basically works on your iPhone or on your Android phone as a code. So if I go to a mobile payment terminal at a store, rather than tapping a card, I just punch in a code from my phone. Also, if I go to the ATM and I want to withdraw money, I choose cardless withdrawal and I just punch in the code and get the money from my account. Now,
still the back end is a card, yeah? I mean the card scheme. No, it's not.
There is no card.
Okay.
It's a direct transfer of money from your account.
Okay.
And it's enabled on 8 out of the top 10. Okay. So it's not yet that popular, obviously, as a card. And there is risks involved there as well. Your battery runs out on your phone, you can't pay, right?
Yeah, of course.
So I think there is still a role to be had, and also the global presence is unmatched by the card issuers and card providers. So this is a local initiative in Poland to lower the cost of having a card, right? And if you can transition your customers to cardless payment, then you're not paying inter-exchange fees on those transactions. So there's some saving. So I think in the future, unless this scheme is out there globally, which is I think would never happen, even the wildest dreams, there's still a role to play for those cards in the cases where you actually do want to have that security and that acceptance and presence worldwide, right? And this scheme is limited to local market in Poland, but it's gaining traction. But it's an example of what different banks and banking unions are doing to try to see where can we still make some money.
Yeah, thank you.
I think the certain aspect at the back end, what you're looking at is what are the rails the transaction is going to carry over. So today they carry over the MasterCard and the Visa, the scheme rails, but we're starting to see changes in place as faster payment systems start to become in place and start to offer alternative rails for those payments to carry over. And it depends what the charges are going to be associated with all of that. Now, MasterCard buying Vocalink is an interesting move in this space. So you see MasterCard has both the traditional rails and they now also have faster payment rails.
Thank you.
Okay, any other questions?
So all of this means more and more choice for customers, more and more products and ways customers can pay. I find that most of my customers barely understand the current set of product offerings and what their rights and obligations are and what protections they get. How do we educate our customers to know that if they don't pay with a credit card, they lose the Consumer Credit Act protection? And if they're paying directly out of their bank account using a faster payment, that's an irrevocable payment. We can't get it back. There's no chargeback in that situation. So how do we protect customers and educate them to know that when they're choosing these different types of products and services, they'll be protected somewhere by someone, whether that's the bank or the third party?
I think the customers expect protection. I don't think they would look to be educated about it. I think they take it as a right that they are protected in their payment and that their money is being looked after. What we've got to consider is the way that the customers consume these financial services. Are they going to consume the financial services through the banking app, or are they going to consume it through Facebook? So traditionally, banks have been very poor at educating their customers on the services that they offer. And unless they start to become customer-centric, customer-obsessed, and customer-focused in how they put their message across, Facebook, Apple, Amazon, they'll come along and do it better.
So maybe with a specific example, a direct debit in the UK, you can claim back your direct debits till the beginning of that scheme, 30, 40 years old. You can ask for your money back. If you do a request to pay using the open banking and the APIs, you've got no such protection. So even though you get more flexibility, you've got less protection. So how will we educate our customers so they know that they're going to lose something even though it's more convenient?
I think that's a very good question. That's been one of my biggest concerns with the PSD2 lens on, if you will. I think you've got a couple of different competing things here. Is obviously, what I don't think the consumers are realizing is that they're paying for convenience at the cost of insurance, so to speak. I think that's been one of the biggest challenges, and you'll appreciate this more than I will, but the regulators and the banks have been talking quite a lot about liability for PSD2. Nobody wants to insure the TPPs, the AISPs or PISPs, whatever they're called. Nobody wants to insure them. In the UK, you get 80, like you said earlier, Nick, you get 80 grand covered sterling, regardless if you have an account. If you start using Apple Pay or any of these other these methods to pay, you don't have that same coverage. I think there does have to be some education. I think it needs to be even more fundamental than just sending out terms and conditions or advertising. I think we need to think about in schools and maybe thinking about a radical shift in how we educate children. And I definitely think it's up to us as parents and aunts and uncles and godparents to think about how we educate the next generation. Because who was it earlier that was talking about data? And I think it was Mike. From WirePay, the currency clouds. I totally got this all wrong. Sorry, Mike. Data is the next currency, and how do we convince the next generation that they need to be more secure with their payments and their data and how they pay?
And can you do that without infringing on customer experience?
I don't think you can do it without infringing on customer experience, but they're at point of sale. Okay. I think that's the difference. We have to get our minds around educating before point of sale happens. Okay.
One thing about security, because it's absolutely a very important point. Well, on one hand side, regulated entities, well, they have their obligation towards the client, and this also has an obligation to take care of any outsourcing entities. I mean, the entities to whom they are outsourcing some activities. But it's not a fair battle. With the growing technology, there's a big burden on the bank side, because they want, of course, to use the cutting-edge solutions, but they are not really yet known in terms of the risks associated to that. So this is the role, and I think that also touches the first point that we discussed. I mean, this is the role of the regulator as well, to track and advise on the standards and to put emphasis on how it is important for any new cutting-edge solution following that kind of standards. I mean, otherwise it'll be always on the regulated entities, and or we should think about promoting the sandboxes to really give them some space to test it, try it, and see whether the risk is acceptable or not. But without that, that's true. There will be a great players and the big losers in terms of liability for the consequences of that game.
Just a quick comment, though, I would say, is that we're still in Central Europe, which is still a heavily cash-based countries. I experienced it myself. If I go and I try to pay with a credit card, they say, well, it's this price. But if you pay cash, it's a bit cheaper. And in many cases, I choose cash because I want that thing cheaper. So if I can pay for that thing cheaper using alternative methods of payments and still get the good price, I'm gonna vote with my wallet and disregard sort of the saving. So I think I agree. It's up to the regulators to make sure that whatever these schemes are, it's not a money-making scheme for somebody or a fraud scheme. It's got to be secured. So that's got to follow through. But in the end, the customers will vote with convenience, with simplicity, and with savings. And I think that's the first bank or fintech that gets that right is going to be the king.
I think you're right there. I mean, traditionally, people have chosen their payment products because of how much cash back they get back or how many points they get back. In the future space, if a supermarket is going to give you double points to access your account and push the money to them without going over scheme rules, you're going to go for your double points.
Can I just go back to a point that you made about, the customer expecting protection? Is that, this is going to sound ridiculous, I'm going to ask it anyway. Is it a bit like, people expect national health insurance? It's just an expectation, and so that you expect that your bank or someone will protect your money, and you don't want to pay anything for it, and you want the convenience and the protection, and saying, okay, I'll make it more convenient, but I'm going to charge you extra.
I think that's very much a cultural answer, and I'm not going to give it to you because I don't have it. But I do think it would depend on where you're from and your background and your education, certainly what country you live in, as to how you would feel about that. Personally, if I'm talking about Monica, not Monica who works at Deutsche Bank, but Monica, I don't expect anybody to do anything for me because I know nobody's going to. Equally, I'm well educated enough because I've educated myself to know my rights. I'm probably not a good example.
Okay.
So I think that's where, as a society, and as I said before, as aunts and uncles and parents, we need to, how can we solve that problem for the next generation? And even for my parents, I had to say to my father, Daddy, turn off your location. Apple is following you.
Yeah.
He doesn't know that. He doesn't know that he has rights.
But at the same time, I'd love to be able to, I go to my pictures and I go on the map to where my pictures were taken. And I love that feature.
Yeah, I hate that feature.
Right? So I think if you think about the generation that's growing up now.
Absolutely, they love that.
It's going to be convenience, simplicity, and it's going to be social aspects. If everybody else of their friends is using a particular payment scheme, they're going to do it too. They're going to not think about, they're going to expect actually. Of course it's covered, it's the banks. I trust the banks, they're going to save my money.
At some point, everything comes at a cost.
So what is the next step for banks, the road ahead? What is it? What do you think?
So I think it's a one-way street. Banks need to grow. In most bank strategies, growth is there. And open banking helps in that direction through customer acquisition and new revenue streams. So in our case, we have picked to go this direction for this reason.
Okay. Anyone else?
Well, just a comment, but it was already mentioned during the previous presentations and the panels. I mean, the banks have a bunch of regulations to face too. And, well, it's a hell of a work. And we even discussed that yesterday, that there is more compliance legal functions within the bank than purely selling business, but luckily there is also now a new product development units, and it has to be all put together. I mean, so security first, because liability is behind that. And I think that, well, merging with fintechs, what I see, it's globally, but it's also happening in Poland, the corporate venture initiatives to grow little new initiatives, new technologies within the bank or within the separate entity associated, linked with the bank, to try new things in a more secure way, but to go for it. So for sure, banks will go with this flow. That's certain.
I would just say that the future of banking is definitely moving into the way of moving away from specific products and services and moving more into managing the lifestyle. If I want to travel, I want to pay for something, if I want to book something, if I want to save and invest, it's going to be moving away from products and it's going to be event-driven and event-based. Right? If the bank or my financial services provider is going to know who I am, is going to know what I do, and it's going to offer me what I need at that particular point.
But that means that, in fact, the banks will lose their identity. I mean, because it'll be, client perception will be, well, I'm buying it. It's no longer this or that banking brand behind it. It's like, I'm just happy with all the things I'm doing. The bank is in the backstage. In fact, white labeling now all the needs.
And that's the biggest threat. Is it going to be the Facebook or the Google that's going to be your financial services provider? Or will the banks be able to, as I said, capture the imagination of the customer to say, no, I trust Barclays. Barclays is going to do a lot of things for me. They're going to book insurance. They're going to pay for my flat. They're going to help me lease a car. So there's not, I still don't believe there's a space for every single bank to grow. So there's going to be those that are going to, yes, they're going to be able to compete for those customers and have a big enough customer base and the trust to be able to go beyond financial services and offer more, and that's what customers would expect. And the others will have to find their business model and either be those service providers, transaction processors, or they're going to become part of other banks.
I think there's a real opportunity here for some new and interesting commercial models, commercial operating models between, you know, the traditional banks and fintechs and startups and even the challenger banks. I think, you know, we keep using the word collaboration, but I do think there's interesting new ways now to make money. And I think there's also interesting ways to save money because you can still increase your revenues by not spending anything, by saving it. And I think this is where the big commercial institutions need to change their mindset. They need their own cultural change alongside us as consumers and the regulators. Everybody needs to change their mindset in order to adapt to these technologies. So I think it'll be interesting to see what commercial models come out of it.
And to go on from that, does that mean that open banking does that mean that banking becomes a collection of companies? You mentioned you're going to a hybrid model. Does that mean working with others? And is that going to become just a collection of companies that you get your banking needs from? You know, we need banking. Do we need banks?
Well, I'll give you another use case as an example, because we focus too much on the retail customer. There's another use case on ERP banking. So the SME customers will benefit greatly, and in fact, that's our first use case and the first one that we're implementing at the moment. So we're placing a lot of emphasis on collaborating with ERP vendors and having them plug into our API layer so that SME customers can perform banking directly from their ERP system.
Okay.
Cut out two middlemen. Yep.
Are there any questions at this point from the floor?
I think one of the things, I got it before.
Okay.
One of the things, part of the panel is a PSD2, and I'm sure that most of the room would like to know how that PSD2, which is more of a European-centric rule, is going to impact non-European or non-EU countries.
It really depends whether you want to transact into the European Union and into the space where PSD2 is operational. So if you want to transact into that space, you need to look at what PSD2 is doing and decide whether you want to actually follow that model and take that route towards open banking and look at the collaborations and the opportunities that are there for you. you can take a protectionist stance against this and say, no, that's not for us. Or you can look at the opportunities and change your business model to adapt with it and then become part of that a larger banking space to offer products across the borders. So I guess in essence it really depends what the geography and what the needs of your customers are. If your customers need to trade and transact into the European Union, then PSD2 is definitely something that you need to be aware of and very much part of.
I think that with or without the regulation, it's the customer's expectations that are going to drive what happens. So if my last experience with Uber has been so great, I expect the same from a bank, whether it is regulated under PSD2 or it's not.
And I think there's 3 elements to PSD2. One is a whole host of this is why you asked the question, Lana. There's a whole host of transparency data that people now need to get when they transact in a European currency, the 28 currencies in Europe. There's a security element of it, which is strong customer authentication, and then there's this open API. The open API element you don't necessarily have to worry about if you're not European, but the other 2, most of the countries around the world already provide the information that PSD2 is requiring, and most other countries also they have regulations in place for strong customer authentication or are putting them in place now. So the 2 biggest consumer protection elements, because PSD2 is actually a consumer protection regulation at its heart, are already in play around the world or are in the process of being around the play. The third one, the open API thing, I think to solve for that globally, I think as Daniel said, yes, that would be panacea for me to see my investment account in the US versus my investment account in the UK. I don't think that's ever going to happen because the regulators are never going to communicate at that kind of level. Thereby, that sort of cross-border banking, I don't know if it's ever going to happen. And maybe it's probably better that it doesn't. I don't know. I think that might be a conversation for 7:30 after we've had some vino.
Thank you, Google.
Or rakia even.
I think that definitely the trend is all over the world. So it'll not be much of a difference. I had a very interesting talk yesterday with probably he's here, Alex, a lawyer, Serbian lawyer. So we discussed about the similarities and differences. And there's much more similarities than differences. Maybe to some extent, you can see that there are some things not yet addressed. But from the client perspective, I think it's an opportunity. And that should be treated as such. And also quite a challenge for lawyers then.
Right, thank you. I've been told we are... Oh, Tim.
Can I just ask the panel, and in fact the audience, how many of you are still using your legacy bank account as your main cash account, and how many have changed in the last 2 years?
So by raising hands, which one do you want to ask?
How many of you are still using the same bank account you've had for 20 years?
I think about 90% have remained with their bank. That's so yeah.
And I'm still complaining about it.
But I don't think open banking is about who controls your account and where you actually, and like someone said it earlier, where do you put your salary? It's more about how you consume the financial services and how you obtain those financial services.
I was just wondering. You know,
with open banking, the money will still stay probably in the same account, but how you spend it and who spends it on your behalf and how you authenticate payments and is going to be totally different.
Right. Well, thank you all. Thank you so much for having this discussion. Right. Can we just get a round of applause for our panelists? Thank you.